The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. It is Matt. How are we doing on this wonderful Sunday? Hopefully you can hear me okay. Can everybody hear me okay? Let's
I
see.
hear you fine.
All right. Thanks, Jake. Awesome. All right. Small crew today. Small crowd. All right. So maybe everybody will drift in. If not, it'll be great for you guys and girls. Sorry, Elaine. All right. So basically what I'm looking to do today is set some alerts. Okay. Any questions, I will get to them a little bit later. But for now, what I want to do is really, when we're evaluating a ticker or a trade that we're looking to do, what we want to do is look at the entire picture of it and understand first what we're looking to do, in the sense of how long is our trade plan for? Is this a long-term investment? Is this a swing trade? The market's a little choppy, so is it just for a reset on the chart? There are different aspects you want to look at depending on the time frame that you're looking to trade. This is a daily right here, and this is TRN. Now, I'm just using candles right now, and we can look at other stuff after. But just to get the picture of the plan itself. So if I was looking at this one to do a long-term trade, okay, I would be looking for the perfect opportunity to enter this. All right. And I want to make sure I know what pattern it's in right now. Is it in an uptrend? Is it in a clear downtrend? So I wouldn't really use my lower time frames. I would immediately start with my higher time frames to get a full picture. So if I'm looking at the quarterly, I see that this has done a split right here. Okay, a 2-for-1. So let me make sure my splits are okay. So here's a 2-for-1. Now, in marking your charts, you want to make sure that you have everything here so you never forget it. So if you're starting on your quarterly here, you have a gap right there. So what I personally would do is I'd like to mark my gap out. Okay, and that's at 53, and it's at $19.21 right now. Okay, and I am looking for a long-term investment. So I'm saying, okay, is this double support? Was this support right here broken? And yes, it was. Okay, so is there other support that this is finding? Pretty much in this area right here where these four candles were. Okay, so just so I have that in the top of my head. Now, this is for setting alerts for a trade and stuff like that. But like I said, I want to make sure I see everything first and mark everything out. Then we're going to evaluate how we're going to set that alert. So if you notice now, we're dropping this down to a monthly instead of a quarterly. And you can see where the gap is now. The gap's a little bit different. Now, from the 2-for-1 split, now we love 2-for-1s. Anything more than 2-for-1s we do not track, but 2-for-1s we do track, okay? So really what this form is forming right now is a double bottom on the monthly, and it never came down to this low. Okay, so right now what we have in place is this right here. Okay, and I'm going to go right to the wicks. I'm not even going to bother with the bodies. Okay, so just to get a visual, I have a beautiful gap on the monthly. Okay, way up here, nice gap. And the problem that I have right now is that I have a pattern in place that's not ideal for the upside. Okay, not yet. Okay, the obvious thing that we're doing is looking for a bottom for a long term, okay, and potentially trying to get this all the way up to 73, okay, and from here that would be a very good profit margin. All right, so we're trying to find that ideal bottom and that ideal entry so we can do that, and then we're going to manage the trade itself in the sense of setting the alerts for stops and so on and so forth like that. So right now we basically have this pattern in place. It's in a downtrend, but potentially we have a double bottom in place. Okay, and the last time we had a double bottom in place, we had resistance right here, okay, at 27. So we need to know that 27 is the 3-candle resistance. It was a triple top. Okay, so if this line breaks, we know that this is going to be heavy resistance. Okay, and we know This is going to be heavy resistance here. Okay, so 27.35. So these are your levels that you want to manage, especially if you're going for a long-term trade. Okay, so we're going to drop this down a little more now, and the lines are going to look a little bit different, but we'll straighten them out because as you get down to it, um, you're working with less time frames, so there's more candles in there, so they don't really line up like they did. So as you can see, we're a little bit higher now on this weekly, and it's all the way up at 80. Okay, that's where the gap is, up at 80. So it's very important to know. Now, you could see some more definition when we're getting into this area here in the sense of, you've already had three candles, double bottom in place, which is really good, and it's a higher low. Okay, but if it doesn't break over this, then we are going to continue down to this side. Okay, so, and I'm going to bring this down to a daily in just a second, but I just want you to see that, we are in this down channel right now. So the investment for the long term potentially could be here, but I'm going to bring it down to the daily because I'm going to use my daily to say, okay, what am I doing here? In the sense of, should I make my initial investment now, or when should I make that initial investment? Okay, so our gap's a little bit higher up here. So our full gap, 80, 83.31. Okay, we have that higher low. We can bring these candles, these down a little bit more. And, when we're on the daily here, we could see that we're going to look back here and we see one gap right here, but it was filled right here. Okay, the gaps are very important. We had a little gap right here. That was filled right here. Okay, nothing else was there. And now when it came back up, all right, it created a gap right here. Okay, so you have a beautiful gap at 35.89, which was that resistance that you saw the triple top on the other one, the other chart. Okay, so now we know we have one gap here. Are there any other gaps that we need to know about? We have that one. Anything over here was already filled. This one has a gap. This, all gap filled there. Okay, but notice we didn't, when we shot back up over here, we didn't come all the way up and fill this gap, okay, because we're in that down channel. All right, the down channel is not set to go north yet. All right, so we have a little tiny gap right here that we want to make note of also. All right, and the reason why we want to have all these lines in here, because this is going to be your trade, okay, and you're going to need to know all these numbers if you're in this for the long term. All right, so you have this little gap here at 21. I mean, there's a lot of gaps on this. This is beautiful. Okay, but it's going the wrong direction. It's definitely going in the wrong direction right now for us, but it has beautiful bounces. Okay, this bounce from here so far has been all the way up to, this 19. Okay, so the first thing that you're going to look for is a higher low. Okay, you could take the trade on this at any time. Okay, anytime you can, but you have to say, okay, because you've recognized that it's in a very aggressive down pattern, but we potentially could have that double bottom in this 15 to 20 area with, gaps all the way up and targets all the way up to 80 something dollars here. Okay, $83. So we can take that trade, but understand you're going to have a few things take place. You're going to have resistance here, resistance here, resistance here. Okay, so the pattern that's in place right now is this trend line. So if I enter this trade, my main concern in the short term, even though this is a long-term investment, is a change in pattern. Okay, and that change in pattern is if this line breaks, we're heading to the downtrend. Okay, we're going to reverse back down and test this area again, or make a higher low somewhere in this area. Okay, so my first alert is going to be set with this here, when this trend line. Okay, so trend crosses this trend line. It's just that simple. Okay, and that'll be my stop. I know to stop out of that. Okay, and maybe trade to the downside, whatever the case may be. So now, if this, and I just hit OK, it's as simple as that. Now I'm trading this now in the sense of I've made my initial investment. Okay. Now, where is my stop going to be for this investment? Well, I pretty much say I'm buying it right here. Okay. I'm buying it where it is right now at $19. So I know this held support right here for a double bottom. So why don't I go ahead and say, okay, this is going to be my stop. Okay. So my stop, I'm going to give myself only $2, which is, I'm just using this for an example. Everybody can do what they want, of course. But now I'm setting this alert, okay? So now what's going to happen here, which is awesome, is it's going to alert you when this is broke. Now you're going to be aware that, okay, this broke. Now either I can get out of it or I can wait and see if this double bottom holds. Okay. And if you want to move this line a little bit lower, you can. Your alert's still going to be there. If you want to bring it down to these candles, I would say right here would be in my immediate, because this candle and these two candles should hold for this. Okay. And then it could possibly, go higher, but you want to make sure that this line breaks. Okay. Now, if this line breaks, which I'm going to set an alert for right now, okay, trend line break to the upside. Okay, boom. So now if any one of these lines are hit, I'm going to know about it. Okay, I'll get an email, I'll get my system to alert me, and now I'll absolutely know how to protect myself and manage this trade perfectly. Okay, just looking at trend and setting trend up, it's just that simple. Okay, so my key lines are my trend line break, okay, or my trend line break to the upside. Now, if this line breaks, all right, that line will now go away completely because you broke trend. So even if it does pull back down this way, okay, this is where it'll probably make its double bottom. But once you break a trend line on any time frame, even if it pulls back lower, it's still going to go higher, all right, because it's a longer term trend line that has been broken. Okay, when you look at that on a short term and a daily, it's the same thing. Okay, when a trend line breaks, that's it, it's broken. So just like if this line breaks, okay, the pattern it's probably going to follow continuously is this one. Okay, because this is your fast trend line right here. I mean, you can even put it on this silly wick up here, draw it in a little bit more. This is your fast trend line. Okay, so by having this line in place, if it doesn't break right here when it closes this gap and hits this, it's going to come right back down and find a new support level somewhere in this area. Okay, because that is the pattern it's in right now. But when we break this line on the other side, then it's just going to slowly drift its way up to these different levels. All right. But setting these alerts is very important, whether you're in a day trade, whether you're in a swing trade, or whatever the case may be. Now, on the weekends, what I like to do is preset charts. Okay, I build my lists out and I set so I know when something is coming, what my targets are. Okay, so with this one all laid out, this is absolutely fine for me. Okay, and if I drop this down to a lower time frame, which I really don't need to, okay, I could see what I'd like to do is probably, if I'm going to look for the long term, I'm going to wait for it to break this because we're only a dollar and change away. Okay, by only being a dollar and change away for a long term investment, I would rather have this line broken. Okay, so that way I know that potentially on any dip after this is broken, it's still going to hold support and follow this trend line to the upside. So my biggest thing would be waiting for a trend line break if I'm going for a long-term investment. Okay, and then I would manage the percent stop that I'm looking for. All right. But you can see how it's just been, from $15 here all the way up to this already, which is great. I mean, you're already up, 30%. Yeah, 30% right here. So it's going to have to consolidate and take a break before it decides what it's going to do. So the question is, where is that going to be? But you don't have to sit here and manage all that. You already set up all your time frames, and I mean your lines, so you'll get your alerts on it. Okay, so on the weekends, what I like to do is I have lists that I create. I know utilities, I know oil is getting a little bit overbought right now. So what I would do is come through the charts, and depending what I'm looking for, let's go to oil. Okay, this is XLF hold no XLE Holdings. I believe I did. That's what this one is. Yep, XLE Holdings. Okay, so no, not XLE. Oh, I'm on the quarterly. That's why. That's a little bit better. Okay. Now, the reason I built this list here, okay, all the XLE holdings, because I knew the sector was getting a little bit overbought. Okay. And how I knew that is I looked at XOIL.X and I evaluated that. So by knowing that we came all the way up and we hit the 200-day moving average, and every time that we've done it on all these moves, I think this one was a 45% move when it got up here, 35%. This There's another move in here too. You have all these little moves, but never broke the 200, and we just made this move to the 200. So I know there's going to be a retracement here. Wherever it may go, it's going to go. But oh, I can't get that only on a daily. So anyway, that's what I used to determine, just one, like utilities is another block that I did. You could see I set that one up here. And then I have my splits here. So, taking a look at APC. All right, so I'll change the net change, and these here have already started. So these are the ones I really want to look at because they've already started. All right. And what I want to make sure is that I'm going to get some trend line breaks or whatever the case may be. I'm going to set these alerts now. Okay. Now there's two things that I need to know on this one specifically for a longer term trade. One is the longer term trend line off this base. Okay. So I need to know this because that would be my ultimate support line right now. Okay. So I have to create that alert. Now I'm doing this for a trade. I'm setting this up for a trade. All right, so I'm evaluating this as a trade right now. And I'm marking on the daily, but I'm going to mark it in a lower time frame also. Because when we hit the 200, we drop. We know the whole sector is getting in there. So what else do I need to know? All right, I need to know lower time frames, but my key to get a full measured move is going to be when these support candles, this one, and this one, break. Okay. If this breaks, there's a 90% chance I'm going to get this. Okay. Now from here, let me make sure I have this marked. From here, estimate down here, if it drops $9 and I'm in options and I know what the ATR is, okay, and I'll even throw that in here. Just so, actually, Ray, you know what the ATR is? I'll probably ask you on a couple of them.
I'm looking.
All right, thanks. So as we drop it down, the lowest I'm going to go is a 30-minute. Okay, now we saw what it looked like on the daily chart. Looks a little different on the 30-minute chart, doesn't it? Okay, the daily said, oh, grab puts, grab puts. That's what the daily was saying. But especially if you're doing options, you want to be anal about your entries. Okay, you want to make sure that you are in the perfect zone. You want to get the best possible price there is. So right now, taking a look at the reason I'm using the 30-minute, okay, it's very important that this is what I'm going to use for my entry. But I'm only going to use it when certain things take place. Okay, now I'm going to move my line up a little bit more. And I recommend this doing with any options you're getting into is starting with your 15-30 and knowing those areas of supports in your time, but you have to evaluate everything at the same time. All right, so there's a support lines a little bit higher.
317 on the daily.
Okay, so we got about a week for that one, so I could get options for the following week if I get a trend line break. Okay, that's what I'm looking for. So if it's $3 a day, you can get it in three. You can probably get it in 3 to 5 days, something like that. So if you want to risk weeklies, you can, but I personally probably go the following week out and get those right there. So here's what I'm looking at right now. Okay, so here's my trend line right here. And it was already broken once, then it bounced over it. So when you're evaluating that, you want to make sure when you get that trend line alert, what you're looking for. Okay. So if your relative strength index is at 30 and this trend line breaks, don't go jumping into puts. Okay, because that's just silly. Because it's going to bounce in the short term time frame. So it's already broken it once, so it's going to break it again. All right. And when it breaks again, that's going to be the bigger move to the downside because all this is a small reset. Now, everybody knows I love my box. Okay. So right now, this is the trade zone for it on the 30-minute. Okay. Because we have this high right here. Let's drag this up a little bit more. And you have this low right here. Okay. And you can see you're starting to roll over here. Now, I need to know tomorrow or whenever this middle Bollinger Band. Okay. Because on this middle Bollinger Band, if this does not break, okay, I need to be aware, and I'm going to set an alert for that. Okay. I need to be aware that it doesn't break. All right. So if it doesn't break, I will definitely get into those puts positions because we've already made 54 on move here on the relative strength index. And what I'm looking for is a double top with a higher low somewhere in this area. Okay, so if it does become this here, then I need to know that because then I can focus on this downtrend line as we start to roll over. Okay, then if this breaks, I would automatically put another trend line, another line up here and set an alert for that. Now you're going to get a lot of different alerts when you set all your charts up, but it's good because your trades are coming to you. You're not going out to get your trades. You already know what everything is doing because you're evaluating the chart. So when I get an alert for EOG, all of a sudden all those images are going to pop up in my head and say, oh yeah, EOG, this, that, and the other thing, $9, boom, 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 boom. Okay. So that's why I always like to do presets, pre-plan, and make sure I know, exactly what's going on with these charts ahead of time. Okay. The more you do, the better off you're going to be. So my 30-minute is what I want to really be looking at right here. All right. And setting the plan up for the trade. Now, if I move to PTR, okay. Whoops, hold on one second. My mouse is acting up. Let's get this stretched out a little bit so we can see more of this puppy. PTR has a lot of stuff going on with it. Okay. A lot of stuff. Now, the first thing I'm going to do on this 30-minute chart is mark out a couple things. I have a trend line right here, okay? And a gap, I'm sorry. I need to set that alert. All right. I'll set these other ones after, okay? Because you have a big gap right here. You have a big gap right here. And I don't know how the options are on any of these or anything like that. But I just like to pre-plan. So this is a gap master from 69 down to 56, okay? And you can see how this moves very choppy up and down, all right? So for me personally, what I'm looking at here is, and we're going to stay on the 30-minute chart, is this trend line right here. Okay. I can buy to the downside right now, and this is going to be my stop, and I'm going to set an alert, and I'm going to say this is my stop. Okay, because I'm already in a downtrend pattern. Okay, and my first target's going to be the 67. So now that I have that looked at, if I look at, what's the ATR on this one? If I look at my hourly, okay, it's going to be a little bit more clear that all gaps get filled on this one, okay? Because see this gap right here? Do you know what the ATR is, Ray?
228.
Okay. You have a gap right here. This was filled by this candle over here. Okay, yeah, this gap right here, and we just filled that gap right here. So we're obviously in a downtrend pattern right now. Okay, and it likes to go get its gaps. So for me here, I'm fine with making this purchase and keeping the stop right here, and it'll notify me. So by setting that alert, if that trend line breaks, I know it's going higher. It's just that simple. And it could only go to here at this candle, and it could only go to this double top over here. I don't know. But at least I know that it broke that trend line and be scared at this point. Either I stop out or I manage the next $2 to the upside. Okay. Then evaluating my daily, saying, okay, well, here's some gaps up here. All right. So if I know if this starts breaking and breaking down, okay, to the upside, then it's probably going to fill these gaps up here. All right, but we don't know until, like I said we're in the downtrend, and that's what I'm going to manage right now. Okay, so that's why I said I would enter, but I could reverse it and play more upside. Okay, either way, as long as I have something alerting me and telling me exactly what's going on, I will know now at this point that, okay, if it breaks this trend line, I could play to 78, which is that gap and that 200-day moving average. Okay, so it's okay to reverse what your plan is because one time frame looks different than the other. The ideal thing that you're looking to do is if oil rolls over, you want to be in right here. Okay? If this rolls over, comes down to this gap, and this gap, all right, it's important that you enter from here. Okay, because if you're down here saying, all right, it's coming to 56, you've missed half of its move already, and you put your risk tolerance through the roof. Through the roof. Okay, so let's say sometimes like I'll get close to tops. Tops are hard to pick, bottoms are much easier. But I'm okay if I have time on my side because of the plan that I have in place. Okay, that's why the percent that I'm willing to risk depends on profits from other stuff. I mean, there's many factors that really roll into what I do for stops, but strict trend lines have to be held accountable, and you have to hold them accountable. Now, on the daily, you could see beautiful starting to do its downtrend, okay? But it has a very important uptrend, okay? To get follow through, this line has to break. Okay, so if we come down and hit this, and then we come up and hit this, we're going to know about it. If it breaks this, we're going to know about it. And if it breaks that, that's when we start getting a full change of direction, especially on a daily. We have a question. Oh, no problem, Vic. Enjoy the afternoon or evening, whatever we're at. So it's very important to identify and let you know exactly what you're doing, okay? Because we don't sit here, if we're going to sit here and tick trade in the sense of every time something moves, we're going to either freak out or not freak out. We're not managing our position the way we should be. Okay, we're looking for, a very simple process. All right, we are looking to buy and play for extensions. I am personally, and when you're doing extensions, you have to understand the full process. Okay, if I'm in this right here and I have these trend lines set up right here, saying, okay, as long as even if I just use these couple of candles right here, I'll do this one first. As long as this doesn't break and I buy right here, guess what? Even if this comes down and hits this, it's still higher than what I paid at 56. But everybody's saying up here that, oh, this one's going to the moon now. This one's going to the moon. You don't know anything about it, and you're buying up in this area over here. All right, and now you have all this chop that's going on right here. You're red right out of the gate. Okay, even though this is going to be a long term, but if you're buying here, you're a mess. If you're down in this area, you don't care what's going on right here. You don't care what's going on right here. Okay, this is Steve stepping to the upside. All right, but you keep moving your stops up a little bit higher. You say, okay, well, all right, well, this was big time support before. I'm already up 20% on my position. All right, well, you tell me if this line breaks right here. All right, so I can protect my profits. So you set your alert. All right, and that way you're protecting your profits. But whether you're option trading or stock trading, it's very important the time frame you want to manage it to how you want to set up your alerts. Okay, if you're doing weeklies and options, I would be doing 15-minute, 30 and 60-minute charts only. I don't even care what the daily is, other than if there's a middle Bollinger Band in the way or something. That I would rather say, okay, I'm playing like this one right here. Perfect example right here. This is an hourly chart on this one. Okay, I know right now all I have to play with is from here to here. And if I'm going to mess with weeklies, okay, I'm saying if I'm buying at this trend line, I want to trade this trend line. All right, so from here to here, it's roughly $2.79. Is that going to make me any money? Because potentially we could come all the way down here, but I know I want 50% profit when we get to this line right here. Because if we don't break this line, then we're going higher. If we do break this line, we're going lower. But I have room right here, if I take 50% or more off the table, to let this bounce up to this area and then come crashing through. All right, but that's when I manage my fast downtrend line. So I'll put another line right here. All right, and as long as this doesn't break, I can hold whatever I want. If I, for a perfect example on this one, nice and simple, we have a fast downtrend line. It's our candles right now, and it gives you that projection of when you're going to get there. And if I'm in puts right now, okay, I want to know if this line breaks, and that's it. Okay. Even if I hit this line, if it comes down really fast at like this clip right here, right, and hits this line, even if it bounces up to this and hits this, I don't care. Okay, even though it moves 50, 75 cents to the upside, I don't care. As long as it doesn't break, I can manage it. But if I'm not entering at the proper time and I'm buying puts in this area over here only because, oil's starting to come down now, okay, and I'm not catching the perfect area, and I'm not aware of this line, and I'm not aware of this line, and I'm not aware of this line, and this thing hits this and bounces like a rocket, right? You just lost everything instantly if you're doing weeklies. Because intrinsic value would disappear just like that. We know how that works with options, especially on the weeklies. Excuse me. So it doesn't matter whether it's SPY or whatever the case may be. You have to plan your entries to be as spot on as possible, okay? In the sense of, yes, this is in a downtrend, and oh, I missed the top. Well, I'm not buying it here. I'm waiting for that bounce to the upside, okay? And when it gets up in this area and starts getting resistance, I'll take a starter position in this area where this gap is. All right, the gap falls in line right here. So I'll use 50% of my budget, or 25% of my budget, or 35% of my budget, or 75% of my budget, whatever they keep, depending on what my relative strength index is. And if it gets up and creates a double top here, okay, I'll buy the rest. But after I enter, okay, after I enter here, and I get a couple of candles, look, I'm already selling. If this thing drops from here to here, and I have 50% of my position, okay, I'm up 100% on my options. What am I going to do? I'm taking some off the table. And now I can ride this even lower and lower and lower until the trend line breaks. And if I have time on my side, I would manage it daily. I wouldn't be managing an hourly, so I would have my daily trend lines drawn. So until this line breaks, like it did right here, I could have ridden it even farther. Okay, granted, it was only, a couple more days, but it was probably, another 120% on the options. But if you were buying here because it was coming down and you didn't have all this information on the chart or know about this trend line, all right, and this thing just went, took off on you, and hey, your options are toast. And that's the hard part about doing it with options. So drawing your trend lines and setting trend line alerts for yourself is extremely important. Okay, and the less you manage, the better off you are. Now I'm using a lot of this in for options, mainly because that's what I do right now. A lot of the stuff that I do, a lot of people on the website do this, is the options. Okay, so let's do the SPY real quick. Okay, I'm going to set an alert for this gap right here, and this is going to be a gap fill. All right, that's what's going to come on my phone right there. All right, it's going to say this, crosses this line, and it's going to say to the gap fill. Okay, and okay, done. So when I buy my puts, all right, I know my target is going to be this gap fill. Now, why do I take a starter in my puts? Because I hit a triple top, a double top. Okay. Now, with this one here, when this trend line breaks, whoops, hold on, let me get that one out of there. Set that alert. Trend line break to down. Takes 2 seconds. You don't even have to buy your puts until this thing breaks. Okay. I do only because it's making lower highs. I wanted my starter position because if we wake up, something happens over the weekend and we're down here at 199.73 at this gap fill because something happened with China on Sunday. Guess what everybody's doing Monday morning? Everybody's buying puts. Everybody and their brother. They're buying puts. They say, oh, China and this and that. They're going down. It's going down. It's going down. Everybody starts piling into puts. But guess what the stock does all day? It bounces all the way back up to this trend line. And then comes up and fills its gap. Okay, but you know what? I could sit here and go, all right, if you want to buy them here, I'm going to take my 600% or 300%, and you can have mine because my target was this gap fill. And then when it gets back up here again, I'm going to buy puts to the downside again. So where's your stop? And how do you set a stop on this? The same way. I'm going to give myself a little bit of room. This was my double top. Okay. I need to know if this breaks, okay, and I'll do it right at the top of the wicks. Break top 4 up. Boom. I don't even have to do anything. I don't even have to watch the trade now. Comes up on my phone. Oh, it broke the trend line. Oh, hot damn. All right. So now I can write it down. All right. So I know I'm going to have support here. I know I'm going to have support here and then other indicators. But you could take profits off at any point in this area. Okay. So if you have 10 options and you sell to here, to here, to here, and then you get the rest all the way down at your trend line. And I mean your gap, and you make huge money. All right, so if it bounces here and goes up to here, okay, as long as that line doesn't break, it doesn't matter. And plus, you've already sold 4 contracts that you have. So you've already locked some profits. You know what? I'm going to buy 2 more when it hits that trend line, as long as it doesn't break it. Then you can play the same game, okay, when it comes back up here. Until finally, you get what you want. Now, this trend line could break, absolutely, but you're going to get a bounce first because of your relative strength index. But understand this trend line, how important it is. And this is on the hourly, okay? If I run this to the bottom, that's my long term, okay? I have another trend line for the short term, a faster trend line, which is right off the ones that I just had. And it's barely holding on by the seat of its pants. So if this line breaks, you can plan on it coming down to this area here. If it does come down to this area here, that means this trend line, which is your long-term trend line from February 11th to where we are now, that's you're going to reverse this entire trade. It's going to bring it down low, 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 low. Now switching to, that was the hourly. Now switching to the daily, you can see the same thing. Okay, and when this long-term trend line breaks, this is where you layer very heavy. I layer very heavy in the sense of I buy a lot more and I give myself time to complete a full trade down to this lower trend line down here to the 181. Here I'm not very heavy and confident because I'm looking for the trade on the short-term trend line. The next trend line is my trend line that's as good as gold. And once that breaks, it's going to bounce up to this area right here, and that's when I'm going to make that investment. Okay? But all my trend lines are marked. I already know what's going on. Okay? And I'll play the full relative strength index reset. So by knowing all this, you're able to manage more charts, more trades, and less stress. Okay? If you pre-plan everything, if you see something, if you see an alert that somebody puts out there, or even I put out there, and you say, okay, well, it's going back up into an uptrend. Well, you set your alerts, you manage your chart. Or you could say, this guy's nuts. Or Jimmy from StockTwits, or Billy from Facebook. These guys are nuts. They don't see it. But, oh, that's a nice chart. Let me wait till it gets back up here and set an alert. And let me draw out the rest of this stuff so I know. Okay, so complete management, and I've been teaching so much in the last God knows how long. When you start putting in everything together, you're really starting to take a hold of your own personal trade situation or investment situation, because you're managing what you see, not what others see. So the ball's in your court how to maximize exactly what you're doing. And that way you're going to make a lot more money. You're going to be a lot more protective of yourself because you're seeing it. Okay, you see that, your input's right here, but this line held, then it broke this line, and it's going higher. Do I really want to wait for 205.35? No, I don't want to wait to, but you're going to be alerted these things, okay, instead of not knowing. You need to know instead of not knowing. Just because somebody says something doesn't mean it's going to happen. And everybody has a different risk tolerance. Everybody can plan their own things differently. You don't know what Jimmy is trading, and he's going long term, whereas you're just looking at the short term. So he can handle all the swings and everything that it's doing. But if you're in, it's a Thursday and you have next week's, you know, he's looking out 6 months from now. So you have no idea what somebody is saying when they say Apple's going to the moon. Okay, their moon might be 25 years from now. Your moon is, holy crap, Friday's coming. Let me buy weeklies on this because it's going to go to the moon, he said. All right, but when you look at it and you go, oh, crap, and you're stuck between a rock and a hard place at this point. Okay, but when you take Apple and say, all right, well, he's saying it's going to the moon. Let me look at a couple things here. All right, well, it's on a great trajectory to the upside. Let me look at the longer term. All right, I'll look at the monthly real quick. You can see the split down here. All right, you have the gaps up here. The trend lines right here. It's going to 440 at some point. I mean, it's just that simple. So yeah, it's going to the moon. But what do you want to do with it? All right, so you have what, a year and a half right here, or a year, whatever the case may be, of doing absolutely nothing. So is that good value for your money? Right? You're in a downtrend. It's just that simple. It's in a downtrend. Okay, and this is with the split in place. So if it's going to the moon, I'm not a moon buyer until it breaks a trend line. All right, I'm not a moon buyer, and for me, I want to know that. All right, because even if this breaks, I can at least test these old highs up here of 130. But if it doesn't get over this line, it's not going to 130. It's coming back down again. So if you drop this down a little more, go to the daily, okay, just what you see is what it is. All right, it's on a bounce. So you have a gap up here at 130. Absolutely. Beautiful. We marked that out. Guess what? We have another. Nope, that gap was filled. Yeah, that gap was filled. I thought we had one other gap. Okay. No other gap right now. So with this being the daily, you could see, okay, it's on an uptrend. All right. But guess where we have a gap? 102.98. So I'm not a buyer of this unless this breaks or it comes down to here and fills this gap. Okay, that's where I'm going to be more interested in getting ready for this trend line break to hit this. Okay, so when it hits this, I'll set my new trend line up off the bottom, wherever that candle may lead. I'll set my alert here because I've made my entry. I made my entry right here. As long as this line holds, I'm going to ride this sucker to the moon. Okay, and if it doesn't, if this line doesn't break, guess what? I still made, $2 here on options, but if it does break, I can manage a long-term trade on it. Okay, but you just have to know these things. And if you don't draw it and you don't see it and you don't plan for it, then you're not going to do it. Now, you could sit here every single weekend and you could do Facebook. Okay, you could do Facebook, you could do Google. I don't know why this is going so slow. Facebook, Google, Amazon, Apple, um, all these bigger boys that are players, all right? Or if you know oil's coming into getting it short, you can go through the oil. The utilities are way overbought right now. I mean, big time overbought. And if you get on the utilities, you start looking at some of these and you're going, oh, look at this double top, and I can move on the daily. This one can move down to, here's a nice little gap right here at 65. So that's another $3 from where it is for a reset on the daily. That looks pretty good. That's my consolidation box right there. Boom, draw your lines out. Draw your line. Oh, this one's even better. 69, 70. This is a $5 move to the downside. Where's my trend line? Let's see. Let's draw this line out. All right. So check it out. So if you're coming to the bottom, right, and you had this marked right here because this was your top, you could have ridden this thing as long as your trend line didn't break if you had this set up and this notified you. Boom. So what happened the last time it did it? Chugga, chugga, chugga. All right. So it's going to go lower. Absolutely. So what am I going to do? All right. I have low trend line here. It's in an uptrend until it isn't. All right. So I'm saying to myself, from here to here, 5% move or a $4 move. This one is worth it to me because I can take half my profits at least right in this area. It has a big enough ATR. What is the ATR? It should be about $2, $3.
$1.26.
Okay, so it'll take some time. Let me just check for any lower gaps on that. Nope. So 30 minutes here. What am I looking for an entry now? Because I already know it's broken. All right. But the 30-minute wants to reset. All right. RSI is at 29. So it'll probably be in this area. All right. So I'll set my alert here because I already know the chart is going to take a break. Okay. But I want the best possible entry. Watch for entry. Boom. All right. So I'm done with this. So come 10 o'clock, 10:30 Monday morning, all of a sudden my phone's going off 7419. All right, D, and my email's going off. Time to check out D. It's hitting the middle Bollinger Band. Okay. And then what I'll do is I'll manage it and I'll say I'll watch it. If it's not getting through and it still looks crappy, all right, I know it can come up and make this double top. So if it does break, I'll move this line up here and I'll reset the alert. And I'll go back to doing whatever. If it doesn't break, I can get my puts. All right, so trade management is a lot easier now when you're being proactive. Okay, ETR. Let's go back to the daily first. ETR. How's this one looking? This one's going to drop, down here to the lower Bollinger Band, $7.25. Look at the relative strength index. It's at 70. Okay, but it has this trend line here, and if this holds, okay, it's only going to come down to $4.87 approximately, $5. Doesn't matter. I can sell half of them right here. And if it does bounce and doesn't get through that middle Bollinger Band, guess what? I can ride them even lower. But if it does break through, I'm still in the profit zone. I still have profits in here because I'm entering at the perfect time. Okay, so with ER, I'll come down to the 30-minute. I know there's going to have to be a bounce here somewhere. I'll start with my middle Bollinger Band, and I'll say, boom, set alert. Okay, I already know it's going down because the relative strength index, the sector needs to take a break. And if it breaks the middle Bollinger Band, I'll come up here and I'll do this. And midday when that's happening, I'll put it up in this area right here. Because all it's going to do is reset in the short-term time frame, but it's not going to break out over to the upside because it's overbought already. This is telling you that I'm already in that pattern. Okay? So now you're just looking for your entry. Because if it was in the uptrend pattern, the pullbacks would be the middle Bollinger Band, middle Bollinger Band, middle Bollinger Band, middle Bollinger Band. All right? And you can see you're starting to spread on your Bollinger Bands and you're making the lows. I mean, if you wanted to play short term, you could say, okay, well, set an alert for this 50-day. When it hits that, I'll play calls up to this first, to middle Bollinger Band, and then I'll play puts. Or maybe it'll make it all the way back up to the box. So you don't need a million stocks to trade as long as you manage a small group and really be anal about what you're doing. Looking for your entry on your 15, 30-minute charts, planning on your 60 and daily. Okay? Planning the trade for a longer term. Try and get the maximum move for what you can. Like I bought stuff last week and I said, early last week, I said, oh, that's for next week. And I don't even care about it. But I was still managing a basket of stocks that I had purchased, a basket of options that I purchased the week before for that week. Okay? So I do things a little bit different, but only because I'm managing the entire process. Okay? I'm okay with being down 20, 30, 40% on some of these options as long as they're staying within my range of not breaking the middle Bollinger Band, not breaking the trend line, whatever the case may be. But I'm managing the profits on the other ones. When I have 10 options and 10 tickers going on each one, okay, that's a lot to manage. But I'm maximizing the profit from each of those where I can carry on my trades that huge profit margin that I do, like last week. Okay, when some people get stopped out or some people didn't, go for the percent and stuff like Amazon. I mean, Amazon was massive, and I said when I was selling everything, okay, so I think it was 12 or 13 I called the exits for. There was a reason I called those exits, but I managed the ones that I was selling. All right, I'm selling a couple here on Amazon, or I'm selling a couple here, 300%, selling a couple here, and everybody knows my 539 is going to be my ultimate target, okay? But this thing could bounce to the moon and it wouldn't matter to me. And why is that? Hold on one second. 536. 509 and the 536. I had something open at 536. There was a reason I had that. Maybe it was my daily something. Lower Bollinger Band in that area. That would take my RSI 10 down to 30 at that point. Okay. So my ultimate goal is the 509. Okay. But I'll never get that next week. Well, it's not true because the relative strength, the ATR can handle it. So if I'm just selling, if I bought 10 options right here when I set it at the top of the box, that was the reason I had my alerts set 582.40. We sold our calls, 18, 36, and 47%, whatever the case may be, and then we took our puts. Then the news came out. All right, I'm selling some here for 150%. I'm selling some here for 200%. I'm selling some here at 250%. All right, so that's managing the process, knowing when to enter. How did I know when to enter and sell the calls without even sitting here staring at it? I set an alert. And why was this alert created? Because this was the last resistance. Okay, so I'm being proactive in what I'm doing. And even though my ultimate goal is here, it hit the 200-day and bounced up. Okay. I had already sold so much that I was riding the rest free. My goal is down here. And it did. It made it down here, and it might make it all the way down to my 509 this week, which would be absolutely, I'd do backflips with the couple that I have left. And I'm going to go for it, see what happens. So it's setting these alerts and understanding these patterns and not managing too much, but knowing what to manage. Okay. There's no need to be overly analytical about it, but there is a need to understand the patterns on these charts. Okay. There is a need to set your alerts for what you're trading, set your entries. If you identify something's going down, you want to enter from your 30-minute chart, but it looks totally different. Okay, your 30-minute chart looks like it's going to go up. Great, that's what you're looking for. Because now you can plan your entry on that 30-minute, and you've already identified on the daily it's in the downtrend. Okay. So the 30 minutes going to tell you, or the 15 minutes going to tell you what it's going to do in that amount of time. All right, so far, does anybody have any questions? I need a drink. Excuse me. No questions? Comments? Concerns? Hey, Rick, how you doing? Phil, what's up, buddy? Hector. Fun stuff, right? Hey, Sanjay. Yeah, I mean, it's good stuff. It's fun stuff. Yeah, I figured I'd do, Rick, I figured I'd do the webinar tonight because my basketball bracket is shot. Hector, you ready for the snow, buddy? Woohoo, it's going to be deep. Yeah, it was a good, oh, there's been some fantastic games, though. I need one more sip of water here. Please excuse me. I know I get into a tangent and I go off, so I wanted to slow it down a little while everybody, digested what it is and see if anybody had any, see if anybody had any questions regarding this and what's next, and where do you start? I mean, if anybody has any questions, that's crazy. Only 3 people. All right, so we know lower time frames. We're looking for our entries, okay? We're drawing our trend lines. We're understanding. So perfect example here, all right, Amazon. And see how beautiful this is for the downtrend, right? But look what's taking place right here, okay? So you can see, if you use this candle, actually, I'll just use the body of that one, the body of this one, okay? So you can see what it did in the short term, okay? It said, I have a bottom here, I have a higher low here, and I just broke the trend line, okay? So potentially, we can come up to the upper Bollinger Band. It's not going to blow up and go all the way up here, okay? But it has to get through this middle Bollinger Band first. So if you were managing your puts, you could actually say, all right, you had this candle and this candle sitting here, okay, and you're in this, you had just this one and just this one right here. All right, and you've been in puts since right here, perfect top. All right, $30 ago. If you just set your alert, set an alert, sell my puts. And you don't have to do anything, right? You don't have to do anything, folks. You bought your puts here. You did drop and you came back up over here. You have plenty of room. You've already sold a lot of them. Now you finally have your second candle here. There's your trend line. So it's going to tell you here to sell it, which gave you an extra $6 from up here. So if you were doing short-term trend, if you were doing short-term stuff like a weekly, are trend lines or MA stronger support? I think the trend lines have more value because when they break, higher volume comes into the move that it's making, whether it's a break to the upside or a downside. They all have their different strengths and weaknesses, but trend lines reverses a trend. Okay, so you can actually go for a longer distance with something, or whatever the case may be, a shorter distance. But the trend is when you break it on a 30-minute, when you break it on a 15-minute. If you break it on a 15-minute, you're going to break it on a 30-minute. If you break it on a 30-minute and it doesn't break it on the 60-minute, then it was a short-term trade for you. If it breaks it on the 60-minute, now you're looking for the daily to be broken. SPY is in that position right now. So if we look at this real quick and we come down to the 15. Okay. So SPY was zippity doo dah, zippity doo dah. Nope, it's still holding on this one. Which chart was I looking at that it broke? Oh, this was the big move right here. So this is your longer term trend line. This was your shorter term trend line. And I had this drawn out the other day, actually. I put it in the chat room. So this is your first break, okay, of that move to the upside. Then it was coming into a reset. So we came lower and we didn't make a higher. Like you could see here when we just kept coming up, even though it dipped down here, it was still making higher highs. Okay, higher highs. We haven't come and made higher highs yet. Are we going to? I have no clue. Okay, this gap's got, but I know right now that with that trend line being broken, that is an immediate start when you have two candles right here. Here's your second candle. Okay, that's your start of a pattern reversal. So now if you're in puts, all you do is set this and say, okay, if that trend line breaks, boom, I'm out. Okay, so with the 15-minute breaking right there, next you need to see is your 30-minute break. Okay, so your 30-minute, I'll leave that one there. I'm going to borrow that one. I'm going to shoot this up here. And your 30-minute broke. Okay, that's giving you much more confidence. Actually, it was up here. That. Okay, and you can see what your resistance was on your next two candles when it tried to make higher highs. It couldn't. This was actually this was actually in the way for this candle. So then it came down to the middle Bollinger Band. So we have the 15-minute and 30 that have broke. Okay, and that was on the 17th. Now the hourly needs to break. Okay. Now when you get the hourly to break, that's giving you much more confidence that you're starting to reverse a pattern. Okay. Make sure those are on there. So your hourly is broken now. And there are your candles. So that massive pop on the last hour of Friday, everybody's freaking out about, look, it didn't get through the trend line. So now this trend line is broken. Now what you're going to get for a measured move is when your daily trend line breaks. So we broke it on the lowers. What's next? Booyah, booyah, booyah. Okay, this is next. But we broke it already on the lower time frames. Very, very important. This is very identifiable to an actual trend starting to change. Okay, none of these broke that trend line to the upside. This did. Now, I'm not saying it's going to, but we'll see what happens. All right, feeling very confident about and happy about the puts I have for this week's action in the weekly chart. That makes sense. 2.67, big push 209. Yes. But you gotta remember, there's a lot of things that come into play. The 21st, we have the OPEC thing going on. Okay, that's that meeting of the minds. It's nothing. It's just them about cutting. It's a private meeting about them cutting all their things. That's on the 21st. Now we have no more buybacks for the next 6 weeks. That stopped Friday. Triple witching is now over. Okay, so remember, the companies can't do any buybacks. They have to go into a quiet period for 6 weeks prior to earnings. Okay, so that starts now. There are a lot of factors that took us up the way they did. Okay, most of it was manipulation. You know, you get all this other stuff. You get quarterly end coming also this week. So we could drift up a little bit higher. We could just absolutely tank. There's going to be quarterly selling. All right. But there's no more buybacks. There's the oil meeting. There's a lot of stuff going on. You know, the Fed was coming up, so that was all the more reason to push them higher. But you notice what the Fed thing didn't happen. We didn't come all the way up to holy heaven up here like we normally do. We got candles that are the size of Texas. All right, we didn't get that. We didn't get anything. Let's see. Oh yeah, but it's always that way. Heavy manipulation, he said. It's always that way. So really, you can see putting these little things in place is just another tool for you to really say, okay, let me manage exactly what I'm doing. All right, we have to manage what we're doing. It doesn't matter what I say. If I say I like something or if I'm trading something, my whole plan is going to be different than your whole plan. You don't know what's in my head. My head is a chart montage, okay? And I don't know what's in your head or your account. So if I'm saying something, you have to evaluate, or anybody for that matter, evaluate exactly what your plan is. Okay, you have to draw your lines, you have to do it. I mean, even if you make a purchase because you like something, then you go back into the chart, but at least go back into the chart and make it known on what you're doing. Know what you're doing, see the value of it. So mostly, yes. Could you take a quick look at Facebook? I can. Um, or you can draw it out on your chart. And then I'll do it. Let's do it this way. Excuse me. You draw it out on your chart, and I'll come back to it in like 5 minutes. And then you could see how you did. Okay. Now, look, I know I did the video the other day, right, on compounding and stuff like that. So real quick, I just want, because you're here, I'm here, we're all here. I'm going to take 2 minutes and say, I want to talk about the value of this. Okay, and I know where our minds are at, just like penny stock traders or any kind of investor or anybody doing anything. Okay, you know, we're looking to make a lot of money and we want it now. All right. We know how much PCLN can go from 10 cents to $15 in 6 hours. We know that. But what risk do you want to put into that? All right. Well, I have $500 left. Let me put this into it. I can make $80,000. I'm going to be happy as a clam. Okay. Here it is, 4 o'clock, and you're going, oh, they expired, worthless. I know it's happened to everybody. Okay. At least once. or 5 times. Look, if you start with $500 and I did it, okay, and you're only taking 30% per week, and you know how much I put out 17, anywhere from 15 to 20 trades out there, okay? Anywhere from 15 to 20 trades. All you need is 30% for the entire week. One trade, 30%. All right. And if you go, you know, 10 weeks, 10 weeks, that's $7,000. Now, just that's where it starts getting more and more interesting. Okay. If you go another 5 weeks, all of a sudden it's $25,000 just from $500. I've done it. Ray's done it. I know many, many people who have done it. When you're putting the charts that I'm showing you and the trend lines and the plans and using the Bollinger Bands that, from all my videos, my training videos that I've done, setting these alerts and planning, okay, you have to work towards something. You have to work towards something. It's all part of a full process. This is a job. This can be the highest paying job you have ever had. I made more money in 6 years than I did in 28 years of working. 28 years combined working, I made more in 6 years. Not happy about the tax bracket that I had to pay, but it cost me a lot to learn. I can promise you that. All right, mistakes are there. Track what you're doing for the week. Understand your trades. I'm red, I'm red, I'm red, I'm red, I'm red, I'm red, I'm red. Okay, well, what the hell are you doing wrong? Go back and evaluate the chart. Okay? Find out what you're doing wrong. Fix it. And if you're doing all right, don't get cocky. Keep tracking, keep planning, keep 30%. It's more fun to make money than to lose money. And the ball's in your court on how much you make and lose. It's not on me. It's not on Ray. Okay? It's not on Phil. It's not on anybody or Jimmy over on Stock Twits. It's on you. What's your stop? What's your limitations? What's your plan? All we have is the idea. The best possible scenario or setup is what we have to give you. What you do with it is what you do with it. Okay? And it's your full plan. If you know the trend line's breaking, you have to see this stuff. Then you go to this trend line. Then you go to this trend line. Oh, it's rolling over. Fantastic. I'm already out 80%, but I have 20%. Where am I going to buy calls now? All right, so it's your plan on what you see on all the time frames. Manage the entire process so you can maximize the amount of profit that's going into your account. Okay, trend lines, they are absolutely fantastic for stops, for alerts, for doing your weekend setups. Okay, you know my chart. My charts must go off all day long, right? Yes, I have alerts going off. When the market opens, all my charts, they're crazy. Look, I got my oil. I'm all ready with, these are all my utilities. They're overbought. Here are my oils because they're going to need a pullback. Utilities have just been blasted. How do I know utilities have been blasted? Hold on, I'll find it for you. Okay, so if I'm looking at, be patient, be patient. I don't have that one set up, but I'm going to have it just set up for you in just a second. Whoops, Control F4. Okay, there's that. There's that. Let me close that, minimize that. minimize that. Come over here, open this. Okay, and put this over here. Crank this up over here. Move this over here, and I'm going to go to here. Boom. Utilities. Turning down. They have cranked up for so long. Imagine that. It took me 2 seconds. That's part of your weekend work. So the utilities are so overbought, they're just going to need a pullback. I have better odds of getting puts on those than I do on oil services. Okay. Or energy. Or even technology. Although technology is getting closer because it's hitting that area. But it was just that simple for me. So now I know for the weekend, all right, let me look at my utilities. Boom, I import my list of utilities, and here they are. All right, let's work the list and set my alerts and set my trend lines and, what's going to be good, what's not going to be good. WEC looks good, PNW, outstanding, ES, beautiful. All right, look at this. It was just like that. Look at how gorgeous those are in the daily. Screaming. Can't touch that one. Don't want to. That one's worth it. All right. So now you just set up all your trend lines. You don't need anybody. You don't need me. You don't need anybody. You just need to know what to do. Couldn't you look at the ETF if you want to simply? Yep, you can look at the ETF, absolutely. I usually go what's inside the ETF. So here's XLE for oil, and here's the holdings of XLE right here. So yes, I do look inside just that. Or I'll pull out all what's inside of it, and if I don't have anything good worth playing in here, then I'll pull out the whole sector. But yes, Phil, you could just look at the ETF, absolutely. Any other questions? All right, we're going to wrap this up in a few minutes. So if we do have questions, let's get those out of the way now. I'm going to look at Facebook real quick. Facebook on the daily had a beautiful move. All right. And since a higher low here. So you do have a trend line in place for that right now. So it's not broke until it is broke. So, I mean, what you're looking at for here, if you're going to play any kind of downside, it's going to be just for a scalp unless this breaks. If this trend line breaks, look for us to reverse to the downside a little bit more. So you could, if you're not in that, you can evaluate it. But it's good to know that there's a nice little gap at 107.77. Okay. And there is also, I thought there was one other one. Yeah, it's probably lower. And also when it gets to the 107, even though it's going to bounce, if it gets here, even though it's going to bounce, it's going to be under the trend line, the longer term trend line, so it could continue down to the downside a little bit more. Manage your fast trend line based on this candle here and this candle here. But as long as you're not making higher, I'll leave that right there. As long as this is your high and this is your lower high, as long as you're not making it over that, you're staying in a downtrend pattern. The minute you cross over that, you will be going to an uptrend pattern. Does that help you on Facebook? Okay, cool. All right, folks. Any other questions? Wow, you're easy tonight. Ray, you have anything to add? Do you have any questions or comments, or are we good to go? I hope you guys found this this helpful. We'll do another one next weekend also. All right. Everybody's nice and quiet and relaxed on this Sunday night, I guess. All right, everyone. We'll see you in chat tomorrow. Have a great night.